Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of SIBO's Options Institute, and it's Monday, April 12th. Now last week, the S&P 500 posted another 2.7% gain relative to the prior Thursday close and established a new all-time high. 10-day realized SPX vol fell to below 11%, and the 30-day realized volatility number stayed unchanged at 17%. A number of volatility measures are at or near their lowest level since February 19th of 2020, which was a previous all-time high. Now the VIX futures curve fell last week with some steepening in the front. On a week-over-week basis, the month 1, month 2 spread moved from 195 to 255 wide. Big tech was the leader last week with Facebook, Google, and Microsoft all making new highs. Now today, the S&P 500 is mostly unchanged early in the session. The VIX index is higher by 0.75 of a point to 1745. In VIX options, last week saw some heavy volume with average daily volume running north of 620,000 per day. Calls outnumbered puts, which is normal for VIX options, but that hasn't always been the case for much of the past year. There was a large July call spread that printed, which was noted in previous Vol 411s. Now today, if we look at the standard April 18 strike straddle that expires on the 21st, that's trading around 220, which prices a range of 2020 to 1580 over the next week and a half. This week will kick earnings into high gear with a number of financials reporting on Wednesday and Thursday. It'll be an insight into how the steeper yield curve and new normal has impacted big banks. Expectations are for a fairly strong quarter across the board, and really expectations are exceptionally high for the first half of 2020 with the fire hose of monetary and fiscal stimulus combined with vaccination efforts. As always, time will tell. That's Volatility 411, and thank you for tuning in.